Dollar yen. Let's do the dollar Swiss. Yeah, it's a comedy. I agree with you. Okay. Take a look at the dollar Swiss, guys, and this is the reaction of the downgrade. This is actually, if there is no downgrade, if nobody said anything about bad news, this is actually is a minor buy signal, and it has an excellent close of 76.61, and we have, as long as it's above 60 76.61, my sell signal is should be below the 76.08, so I'm 60 pips above my sell signal, so that is actually, I can consider that as a buy, and that is one of the signs that we do have a strength should be coming into the US dollar, and we should be seeing some buying coming into the US dollar, because after all the downgrade, this is what the reaction we got. So we have, guys, we had bad news, and this is good action. You agree, Tutu? All right. So with that, and if you go to the intraday, you can see here those multiple levels. And you see that if you look at this, you got, I mean, this is, again, it's picture perfect. It is nice. Okay, take care. And this is something that you'd like to see on a chart structure. You got the low, it came back and it went above these multiple layers, and then it came back, it tested it, and it held. Yes, it doesn't matter if it happened after hours or not. The market is structured. You would see that in the market, and then it kind of held, retested those levels, and it bounced up towards the high. So this in itself is a pretty good setup, and if we're going to sell it, this is where we're going to sell it below. So we're going to short below this price point, and if we do short it over here, then our stop is going to be above the 76 49, and if I'm going to buy it, I'm going to buy it above this structure point over here, because this is the breakout, is going to be my buying point. So I'm going to buy it above the 70, well, let's call it the 77, just to round the number. So I will buy it above the 77. So for the dollar Swiss, we're buying above 77, and we are going to sell it below 76.10. And if we sell it below 76.10, my stop is above 76.50. And if I buy it at 77, I'm going to use the 76.50 again as my stop on either side of the trade. And my structure long in this case is still the 82.74, still remains the same. And my structure short is the all-time low, which is the 78.50. That is the low. This low that you see here, that is the historical low. So there is nothing underneath that by air. So this is going to be my so the 76.50 ballpark, 76.50 is going to be our structure short point. Okay, so this is the dollar Swiss. Okay, we're buying it above 77. We're placing the stop below 76.50. We have a structure point above 82.74. So you can expect, if it goes above the buy and it goes above this, you can expect an explosive move. And that is when you have this distance between the buying point and the long point, you can see that this is an indication of a short covering rally. These are the symbols of the symptoms of a short covering rally. This is when you can see the possibility of having a short covering rally, when you have a big distance between your long point and the structure long. Yes, the dollar Swiss. And on the short side, we're going to go short below 76.10, and your structural short. Okay, that's 76.10. And we'll use the stop on both of them as the 76.50. Okay, that is the dollar Swiss.